It's Wednesday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Andrew Cox giving us a shipper update, but first we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Wednesday carrier update presented by PowerFleet. I'm Zach Strickland, and we have finally found it, that point where it looks like we have actually topped the outbound tender volume index and we have crested volume. So we dropped for the first time since February 25th from over 12,800 to just under that to 12,776. So that was a 1.25% drop overall. Which isn't significant, but still, we've been waiting for this moment. We knew that this 12,000 number was not a sustainable figure, as outbound freight volumes are just too high to be relatively, you cannot operate at that level. Shippers don't have that much inventory. We don't have enough freight coming into the country right now. Manufacturers cannot produce that much freight. So also, that being said, is that everybody is now working from home. They don't, most of the country is now sitting remotely in some other place. Only essential facilities are operating right now. So that means that production levels are probably down. Not really a lot of information on what consumption's acting like at this point. But we can assume that whatever is happening there is probably starting to slow down too, as people have probably gotten through some of that initial phase of working at the house and hitting the Amazon orders or whatnot. But still incredibly high year over year. We were sitting at 10,300 this time last year, well above that at this point. It's probably going to take a little bit of time for these volumes to start come down. But that being said, it's not just one market. We were talking about a few of the bigger markets here in the last couple of days, starting to show some signs of weakness in Los Angeles, Harrisburg, et cetera. But now the rest of the country has jumped in, and looking behind me, the outbound tender volume index tree map here. The point of this map is really just to see the amount of red. If you've paid attention over the last couple of weeks, it's been all green, 80–90% green, which means that all of these markets are having day over day, week over week increases. This is a day over day decrease. This is not the weekly change. This is just a single day. So we're starting to see a lot of volumes. Lakeland, Florida, for instance, a lot of activity of the food industry down there, 7.5% drop. So maybe some of these shelves are starting to get a little bit more stocked up. They don't necessarily have the orders coming in like they were before, but that being said, it's all over the country. It's not just one particular market. So this is very important to watch, especially as some of you carriers out there maybe have grown accustomed to some of this, overheated activity. Now's the time to start grabbing a hold of a lot of this freight and trying to make sure that you are in the right positions. Avoid some of these markets that are dropping these volumes right now. Elizabeth, New Jersey really didn't take off like a lot of the other markets did, so it's certainly a market to avoid here in the next couple of days or so. Denver still hanging on, 3.8% increase day over day. So again, we're going to have this volatile period with volumes here over the next couple of weeks. What's it doing to rejections? Now, the interesting thing is that volumes, the demand has not translated to rejections coming down just yet. Now, rejection rates did not increase simultaneously with volume. It took a while for that glass to empty out, as we call it in the, when you're looking at capacity. The trucks were in their positions early in March. It took about a week or so for rejection rates to start to really increase. We'll probably see the same thing here on the back end of this as rejection rates start to come down a little bit later than volume. So rejection rates right now still day over day. This is a day over day tree map of rejection rates. A lot of green on this map right now, so capacity still tight. Carriers are still going to be out of position. It's still an imbalanced market. We still have a lot of volume flowing through there. Just because we started to fall down does not mean that the faucet turns off all at once. So we still should have some capacity decreasing capacity here over the next little bit or so. Looking at the rest of the market, looking at van and reefer rejection rates, both showing signs of slight weakening. Reefer less so than van. If you notice that reefer was a little bit late to the game, van a little bit sooner on the rejection rate side. Van's starting to show a little bit more weakness. Atlanta, Harrisburg, the top 4 markets in the country, still showing strong week over week increases in rejection rates. So all the length of hauls still showing increases on the day over day. So again, capacity is still tight. Volumes are starting to come down though, so be ready for it. That'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning everyone. I'm Luke and I'm bringing you another broker update, and we've got some really interesting things going on in the freight market. First, we've been following volume levels overall in the United States, and they've been on a constant rise. If you notice here, right around February 25th is when that rise really started to push, and we've seen freight volumes increase by nearly 30% above where they've ever been. But you'll notice today, for the first time, we've seen a dip. That's the first down dip we've seen since February 25th. We have not seen volumes go down at all since then, so that's the first indicator. Obviously, it's just one day, but what I want to draw your attention to is U.S. imports. We don't typically talk about that on the broker side of things, but it will impact your business, as I'm sure most of you are moving a lot more freight right now than you typically do, and that may change. This red line here, that is number of imports in the United States. Okay, so you can see here, it's on about a weekly update, so we're about a week behind where the tender volumes are. But notice it's down by about 25% in the country right now from where it typically stands, 25 to 30% down, and it doesn't look like it's going to be improving anytime soon. It looks like it's just maintaining or trending sideways. So you've seen here, since they've moved down, that's going to decrease volume as those warehouse supplies just get decreased and squeezed out. If that doesn't get replenished by U.S. imports soon, then you're going to have volume continue to fall. So we'll keep an eye on that. What I want to draw your attention to next is rejections as well. While volumes look like they might start to decrease, we'll see. Tender rejections are still on the rise. This orange line here is overall tender rejections in the United States, almost at 20%. We're a little less than 19 right now, so that's continuing to go up. And so you're going to want to increase your spot market rates. Now, the red line is reefer tender rejections. They've hit nearly 30%. We haven't seen reefer tender rejections that high year over year, so that's a very, very high point, meaning that you should increase your spot market rates on reefer loads. Now, the market that we're going to look at today is the LA market. Notice here this orange line, that is the that is the dry van tender rejections out of LA, sitting at almost 15%. That's the highest we've seen in the last year period. So continue to increase your spot market rates out of LA. Now, notice here, this red line down here at about 10%, that's the 2018 tender rejections around this time, and the green line is tender rejections from 2019. So you can see tender rejections are far above where they've ever been in LA at this point in the year, meaning spot market rates are going to be through the roof right now. So continue to push those up on your shippers because you will be paying a premium to your carriers. Now, as far as volume goes in LA, this orange line here, that is the volume level for truckload in LA. And we saw this massive push here beginning around the last week of February, all the way up, about a 25% increase in volume levels out of LA. But we've peaked around the second week of March, and we've fallen down, and we're almost back to where we started out of LA. Now, this red line is imports coming into LA. LA is the biggest import city in the United States, and we saw how those imports have fallen by about almost 50%. However, it looks like they're starting to creep back up in LA, so we'll see what happens. If that does continue to hold, then there might be a little bit of life brought back into the LA market in terms of volume, but as of the moment, volumes are going down. It doesn't look like they're going to stop anytime soon, but rejections are still up. So while there might be a little bit less volume out of LA, increase your spot market bids when those loads do come through, as carriers will ask for that premium. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your shipper update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Anthony, I'm kind of questioning, as Luke and Zach both did, if this freight frenzy is behind us. We have seen volumes fall for the first time in weeks. We've seen this incredible rise in our outbound tender volume index, and we've realized that this is not only unsustainable, but also unwarranted in many cases. There's been people panic buying and hoarding goods that they typically wouldn't buy so much of. So I do believe that volumes are about to fall off a cliff, and that's because the majority of the goods in the U.S. are not moving. The only things that are completely safe from downside recessionary risk right now are consumer packaged goods, food, and agriculture products. So I just think there's a lot of freight that isn't moving in the U.S. right now, and we're about to see volumes fall off a cliff.
Right, and so a lot of that freight that isn't moving, we're thinking those not essential businesses, right? So even we're looking at retailers like department stores, they've all really been shuttered for the time being, and so we're not seeing a lot of those other products that would go into freight being hauled throughout the country.
Yeah, that and the fact that the 50% of Americans are currently under shelter at home or lockdown, so they're not, even if the businesses were open, they're not able to go out and freely participate in them, or nobody's working in them. So yeah, there's so many factors at play here that are keeping people in their home, and I don't feel that our volumes are going to stay even above the 10,000 starting point that we had in March 2018. I think we're going to see volumes fall through the floor, and maybe even at this time next month, we're looking a month out, that volumes could be in this 9,000 range, which is looking at a low season in the January level type levels.
Right, and another area that's not really consumer facing that's going to be impactful for this is industrial production, right, or manufacturing. A lot of those factories really shuttering. Employment was already really kind of in an interesting place. Definitely. It was struggling throughout 2019, and there was a lack of business investment, right, in manufacturing and in a lot of those capital goods. And so what we're seeing is that that's even going to be another area of weakness to come from a non-consumer facing segment.
Yeah, this is really ill-timed for the industrial and manufacturing sector. We had seen that multiple people were calling for that second half recovery, that 2020 was going to be a bounce back year for industrial production, and I don't think we're going to see that this year because of this coronavirus having many of the factories shut. GM just announced yesterday, or maybe it was GE, excuse me, that they're laying off 2,500 people for the short term. They're shuttering their air engine department. So I think that's the first of many. We're going to see a lot of manufacturers looking to cut employees here in the next couple months as their factories are closed.
And a consumer-facing segment that might also be impactful, construction, right? I know we chatted about this earlier in the week. Mm-hmm. February results, of course, February is so long ago nowadays, but positive results. But that's not going to be something that we can really depend on in the coming months, no.
Right. We saw, I think, new home sales came out yesterday, and they were a little bit below estimates, but rightfully so. But really, when that March date hits, that's where we're going to see the real impact of a lot of this coronavirus to many different industries across the U.S., housing being one of them. Right. I think we're going to see new housing starts be way down, not only because of lack of demand, but also the amount of workers that are able to get out to those sites. I know I've seen here in Chattanooga a lot of the construction sites, there haven't been people on them for the last couple days. So yeah, I certainly think that the construction side of things is going to slow down for the next couple months.
Got you. Andrew, thank you so much. Tons of factors at play. Thank you, as always, for the update, and thank you so much for tuning in. That's going to do for this episode of FreightWaves Now, but the content doesn't stop here. We're always streaming around the clock, so check us out on all your favorite streaming platforms like Apple TV. So check out our FreightWaves TV app. Thank you so much for tuning in, and we'll see you on the next episode.